Hey, what's up investors? Dean here. CCIV is down over 60% from the all-time highs, and there are a few factors that contributed to this. Firstly, Lucid Motors valuation was a lot higher than what expectors thought and were hoping for, causing the stock price to fall down very sharply, very quickly in the pre and post market the day after the merger was announced. Secondly, we have profit taking. A lot of people bought in early, like myself, into the merger rumor, hoping to sell the news and swing trade the companies. So that has attributed to the stock price falling too. And then lastly, there is the worry that there will be a shortage of chips required to manufacture these cars, causing the whole EV market to plummet. And watching the stock fall down from those all-time highs and being a holder in the stock for quite a while now, it has been ugly to watch my portfolio fall down by the numbers it had. CCIV went down over 12% yesterday alone, and unfortunately over the past few weeks, this is something that I've gotten used to, and it is not easy to hold. But I remind myself why I invested into CCIV. I didn't invest into CCIV to swing trade it. I invested into CCIV because I wanted to be an early investor into Lucid Motors, and that's exactly what I am. I am planning to hold this stock. I think that it will be one of my best investments, and I'm planning to hold them for many years because of that. Everyone wants to find the next Tesla stock, and by far Lucid Motors is Tesla's biggest competition, and that is why I think that it is a hold. Do not sell right now. Of course, I am not a financial advisor, and this is not financial advice. This video is for entertainment purposes only. I understand why people would want to sell, particularly if they bought in later on. Don't forget, there are people out there that bought in at the $60 to $65 a share mark. They've lost a lot of money. However, they only lose when they sell. So if they can take a step back from that fact and hold long term, I think they'll be just fine. I personally think that CCIV shouldn't be as low as it is right now. I do think that is extremely undervalued, and I would even consider buying more at these prices. That's not to say that it's not going to continue falling down. I've seen people claiming that the stock can fall down to $15 a share. I personally don't think so. I will be shocked if we fall below $20 a share, but whatever happens, even if this goes down to $15 a share, I am not selling. I really think that we'll be back to the $30 to $35 a share mark in the next few months. And I wouldn't even be surprised if we hit the $50 a share mark maybe this time next year. So I'm not selling this company. I got in early. I'm still in the green, so it is easy for me to say that. However, even if I was in the red, I don't think I'd be selling, because I just see the potential, and I see Lucid Motors the next Tesla. And if you look at Tesla stock, we know for a long time it was trading sideways. I'm perfectly fine with that. Of course, I'd love to see it go up every single day, but that's just not how the stock market works. We saw a monumental run up in the stock. Look at that. Whenever you see a stock run up so sharply, it will be silly not to think that it's going to crash or have a bit of a healthy pullback. In my opinion, I don't think this is a consolidation. I think this is a bit more to it. However, long term, I think you'll be just fine. Now, there's some news coming out for CCIV that we should look forward to. Take a look at this article here for CCIV. CCIV stock, what is the big Lucid Motors news coming on March 17th? Lucid Motors, the company coming into the market via SPAC merger with Churchill Capital, is a stock with a ton of hype right now. To date, CCIV stock is still up dramatically since the SPAC went public. However, shares of CCIV stock are down more than 60% from their 52-week highs a few weeks ago. Today's shares are down more than 6% at the time of writing, amid what appears to be a strong downside momentum. Here's why SPAC investors may be enticed by this drop as a buying opportunity right now. News is on its way. A tweet today from Lucid Motors that a new in-vehicle entertainment system will be announced on March 17 at the XFSW conference has apparently missed investors. This Lucid Air X doubly autonomous experience is being dubbed as a world first and is certainly intriguing. The fact that this announcement will be made at the SXSW conference is an interesting one as well. It appears companies still in the early stages of product and market development are relying more on innovative platforms to get their message out. The SXSW conference features a variety of tracks that allow attendees to explore what is next in the worlds of film, culture, music, and technology. SXSW proves that the most unexpected deliveries happen when diverse topics and people come together. This year's conference is offering a digital experience as part of the company's offerings this year. It is an interesting platform for Lucid to attract new eyeballs from investors interested in unexpected discoveries, adding to the intrigue of this veiled announcement. So here's what Lucid Motors tweeted. So we've got some news coming out. They're being a bit secretive, I feel. They weren't too clear as to what exactly to expect, but we're going to find out on March 17th. And with some good news, I think this is what the company needs. This is what us investors needs, particularly after we found out that they're delaying the delivery of their first vehicles. Good news would be really helpful right now. And this is the reason why I wanted to be an early investor in Lucid, because I do feel that there will be many good announcements coming up over the next few years, and it is a company that I'm not selling. It is hard not to sell it. It is ugly. I wake up in the morning and check the stock market because the New York Stock Exchange is open while I sleep, and I wake up in the morning and let me tell you, it is an ugly feeling when I see that 12% down in Lucid Motors. And the other company that's been giving me that ugly feeling lately that I am invested in is NIO. Now, NIO is down only 4%, which is funny to say, only 4% down. However, when you see what I've been copying from CCIV, this is a good day right now. And over the past 5 days, we've been running down. In fact, over the past month, we've been trending downwards. We were trading at nearly $65 a share at one point, and right now we're down to $41.53 a share. Now, NIO is down for a multitude of reasons, and one of them that has me a bit worried is the fact that there is this shortage happening right now with chips required to manufacture these vehicles, and it gets me a bit scared because if this affects the company, if NIO has to start slowing down manufacturing and then next quarter's results come out that they didn't meet deliveries or finances weren't as to what they expected, we might see this drop down again. I personally think that NIO doesn't deserve to be trading at this price. I do think the $60 a share mark right now is where they deserve to be at, and I do think this is a good buying opportunity. I've been saying that for NIO for a while now. I've been saying that these dips are a good buying opportunity. I am invested in this company. I am long. But again, this is not financial advice. Please do your own research before investing. Speak to your financial advisor. This video is for entertainment purposes only. I just think that Lucid Motors, I think that NIO are the future, and I think they have a lot of run up. I mean, let's look at the number one in EV, Tesla. Since 2016, they were trading at $40 a share, and look how long they went sideways for. It took them 4 years before investors really started getting rewarded. I personally don't think that this is going to happen with Lucid and NIO. I think that investors now see where these companies are going, and thanks to Tesla, who really paved the way for that, I think that it's not something that we're gonna see that NIO is gonna be trading at $40 a share for the next 5 years, or Lucid trading at $25 a share for the next 5 years. I think that over the next few months, we're gonna see a bit of a run up in the share price. As I said, my price target for the next few months for Lucid Motors or CCIV is the $30 to $35 a share mark. I'm hoping it's going to be closer to that $35 a share mark. And I think NIO is gonna be at least back to $50 to $55 a share. That would wrap up this video, guys. If you want to watch a video on another EV company that I have recently bought, it's a company that is extremely under the radar. Right now, it is an over-the-counter stock, so it is high risk, but they are uplisting to the New York Stock Exchange, and I personally think that they are extremely undervalued right now. Well, check out my video at the end of this one on Bus XF. I'll also leave a link in the comment of this video, so I'd really recommend you check that out. Please hit the like button, subscribe to my channel, and turn on notifications. We are going to be covering Lucid and NIO on this channel quite oftenly because, as I said, I am invested and I'm bullish on both these companies. Turn on notifications so you don't miss out, and thank you so much for watching. Till next time, have a good one.